If everything is more expensive, spending will decline. Unless you came here for the truth, so let me unveil that for you. Today we're going to talk about what is going to happen. I'm going to show you the details you need to know. And the very first thing we need to talk about is shipping. Shipping is so important, not just for those who are directly going to be receiving these shipments, not just the importers and the exporters, but it affects you because there are so many things integrated in with it. We will take a look at all angles of this. The second thing is the coming crisis that we need to talk about, which many have decided it's inflation, it's deflation. In this case here, Nouriel Roubini is talking about stagflation. We'll get into that. And number 3, automation. So key, so important. Let's get into all of that and more. Let's go. First place I want to start is by looking at the Baltic Dry Index. You can see right now it is at 32.85. If you take it back historically, it's still much lower than where we were at in 2008. As you can see, I think that's pretty obvious. It peaked out at over 11,000, but that was for a brief period of time, as you can see. Now, back in 2020, if I show you let's go back over here. This dropped down to, if we go to the 5-year, maybe I could take a look at this and you could see it was near a historic low at around 400. So this has accelerated quite a bit. This basically just shows you one very narrow view of the industry, but I think it's important. It's a very popular way of tracking all of this, and I think that people should be looking at many different aspects. So let's take a look at this one, which is the container shipping rates. The actual prices being paid are astronomical. Just take a look. They show you different ones here: composite container index, Los Angeles to Shanghai, and it just goes down the list, and all of them are excessive. Okay, now certainly there are some that are much higher than others, but the point is that you are paying much higher rates today than ever before. I'm going to show you a resource that try and find an actual alternative news or mainstream media that actually gives you the resources. I'm going to give you one today you're going to actually be able to see where the vessels are, and you'll be able to see where there's congestion, as I will show you in just a second. Where there is congestion, you got logistics issues, you've got supply chain issues, you've got these different problems, you're going to have higher prices. When you have higher prices, what does that mean? Less spending. We'll talk more about that in just a second. Look at this. Outer Pearl River Delta area, I'll get more into that in a minute. Anchorage congestion, the amount of containers. You could see it has accelerated beyond what we saw in early 2020. So we're now even worse. This is supposed to be getting better. Okay, and this article talks all about that. Pearl River Delta jammed. Okay, that's the area it is referring to. And you can see the principal goods highway to the world's consumers is jammed. Okay, it's talking about, okay, we got this issue from last year and so on. Vessels have backed up into the South China Sea while others have sought alternatives, and it just goes on. However, Pearl River is now packed with anchored giant box ships waiting for berths to open up, as the below enlargeable image, which I'll show you in just a second. In fact, I'll take you to the resource. I'm not going to show you the image at 4 p.m. local time today. Clearly shows that there's a lot of these ships at the anchor. Okay, and they talk about lockdowns. They talk about what's happening here, and this is the reason why. You can use any excuse in the book, legitimate, contrived, doesn't matter, fabricated entirely. It doesn't matter. What matters is what you pay. What you pay. If you own a business and suddenly maybe you own, I don't know, let's say a vegetable stand, or maybe you sell food products, or maybe you're a tradesperson and you've got to get materials, you've got to get goods, and suddenly those things are harder to come by. You need to source from alternates, because normally you're going to get something that's reasonably priced to you so that you can make a profit, so that you can continue your business. But if suddenly you can't get it from your normal supplier, at least in the timing that you need, you have to seek an alternate. Now, suddenly it's more expensive. What does that mean for you? Less profit. Can you sustain this for a period of time? It's been going on right now for a year and a half. Are you going to be able to continue your business? And this is why so many businesses close. And the funny thing about all of this is that we've barely heard any information about the real, true statistics about how many stores have closed. Strange, right? Okay, so this is the area it is talking about, the highlighted portion there in blue, and you could see all that congestion, okay? But I will take you to marine traffic, this particular resource. It's a live view, as you could see here. By the way, links will be in the description. This is a live map, and I've shrunk it down to basically just give us a little bit of insight as to what's happening. You could see this cluster right here, all of these different ships. Now, you're always going to have ships that are simply waiting for whatever reason, but in this case here, this is massive. And we don't often see this, but that's going to be a problem going forward, it looks like, because there's no resolution apparently. Now, as it relates to this resource itself, you can go on the left-hand side, and you can click on vessel filters, and you can go through here, ship type, and you could see, for instance, tankers. If I were to do this, and perhaps I could see, where this is going to and from, I can go around the map. If I zoom out, give a little bit of insight here. I got to close that down. If I just wanted to zoom out, I can just show you, just because I think it's really, really good to see where these kind of things are coming and going from. And the more often you're going to go through this, you're going to learn a lot more about what is normal and what is not normal. But anyway, just wanted to show you that I think it is important to understand where things are coming to and from. There's a free side of this, there's a paid side of this, but you can definitely check this out. I would highly, highly recommend it. Number 1, every aspect of shipping goods is now more expensive. Number 2, prices that you pay are rising for many reasons today. Number 3, inflation, as in price inflation, is basically going to hinder your spending or everybody's spending. And as a result, you're going to need stimulus to pick up the slack. If that stimulus doesn't happen, then you've got a big problem. So watch that key indicator, and you will be amazed at how it correlates to what's going on in the economy. You've heard inflation, you've heard deflation, and in this case here, we're talking about stagflation. We'll talk a little bit about that really quickly. The point I wanted to make before I get into it is that nobody knows what's going to happen. We could see and take all the data that we currently have and try to make an assumption about what's to come. But I think regardless, people should be prepared, try to be as self-sufficient as possible, regardless of the direction we're heading. Okay, check this out. The looming stagflationary debt crisis. Years of, by the way, by Nouriel Roubini. Years of ultra-loose fiscal and monetary policies have put the global economy on track for a slow-motion train wreck in the coming years. When the crash comes, the stagflation of the 1970s will be combined with the spiraling debt crisis of the post-2008 era, leaving major central banks in an impossible position. And I do believe that's true, because what are they going to do? They've already got interest rates at rock bottom. Some have said, they'll just bring rates into the negative. But if you look at Japan, if you look at places in Europe and so on, you see that negative interest rates actually don't have a positive effect. So there's really nothing that they can do in that way. And instead, they'll have to print money. They'll have to print money. And what are they going to buy next? Maybe they're going to go directly in, buy stocks. You tell me. In April, I warned that today's extremely loose monetary and fiscal policies, when combined with a number of negative supply shocks, could result in a 1970s-style stagflation, which is high inflation alongside a recession. In fact, the risk today is even bigger than it was back then. So regardless, I do think that it's important to watch these type of statistics because you can see that for yourself. It's building up there. I mean, there is a real recession going on. If you take away the moratoriums, if you look at what the government has been putting in place, keeping everything basically alive, I mean, that is unsustainable long term. And yet, if they were to cut those off today, you would see some serious chaos. And yet, what exactly is going to allow them to continue on with this? It's unbelievable. And you look to the future and you say, well, we're going to grow out of this, because that's what they say. We're going to grow out of it. We just need growth. And that's why they always push for inflation. The Federal Reserve says we need growth, we need employment, and so on. Really what they're trying to do is have an excuse for creating inflation. Short-staffed restaurants prop up table service with technology. Labor shortage encourages full service change to deploy serverless ordering and payment strategies that were pioneered in fast food. Same situation. You got a wave of automation that could be bad news for workers. The need for social distancing led restaurants and grocery stores to seek technological help that may improve productivity, but could also cost jobs. If you remember back in the 2008 timeframe, this word productivity was thrown around a lot. I remember one particular financial company said that they increased productivity significantly. In fact, it was more than what they had hoped for. And what did they do? Well, they laid off more people than they initially projected they would need to. I mean, that is fantastic. I mean, that is so fantastic, right? Oh, wait a minute. You got rid of a whole bunch of people that were working there for 10 years, 20 years, 15 years, whatever the case may be, and all they wanted was a job. They didn't want a package. They just wanted a job. Anyway, so what's going to happen here, and what has already happened, is that you've got these type of businesses that are putting in, whatever it is, iPads, or maybe you order from your phone, they have an app. And what we've already seen, robots bring it to you, maybe robots flipping your burgers like Flippy the robot. And it is very clear that for a lot of jobs, people will be replaced by robots. Then you have this, is just something I found interesting. Man outraged over $100 minimum at River North restaurant, but many restaurants are holding on to such rules. So it's just an example that I want to throw out there. They, because of the situation, because of the difficulty we've had, because of this and that, we are going to put this extra fee on you. And you've seen a lot of these fees being put in place. Maybe it's a much smaller fee, but the point is that they've been dealing with hardship. Therefore, they're going to pass that on to the customer. I think it's pretty clear. I think that's what they're all doing. Then you've got this. I mean, the expenses that people are paying today are astronomical. They can't afford it. For some millennials, a starter home is hard to find. Shortage of small, single-family homes leaves some first-time homebuyers frustrated and out of luck in a hot housing market. This is an incredible housing boom, to say the least. We have noted all over the place, not just in the big cities, but it's going on all over. And it is unsustainable, quite frankly. But what they're trying to do is keep these interest rates rock bottom, or as close as they can get, in order to keep this fueled. Because in some places, without the real estate boom, you have a very weak economy. So they need to keep pushing that. I'm not sure how much they can keep this pushed out. But I think what we will be going into is the 40-year mortgage, the 50-year mortgage. I think that's probably the way that they will save this. Who knows? Look, if you want to be able to get to me, the only way to do that for sure is to get on the insiders, because any day, you never know what happens. Okay, so I am asking everybody to sign up for the insiders, even if you don't want to look at the insiders emails that come through. This is your way to make sure that if anything happens, you got me and I got you. Okay, 5 days a week, I send you the video of the day. That ensures that this is coming towards you. Now, I got thousands of people who have already signed up, and I want to thank each and every one of you. It's really amazing to see how many people are getting these emails. We're communicating. I think it's fantastic. So you can click on the card that I had up here, or you could simply go to the Money GPS STEROlDS.com. If you found the video informative, hit that thumbs up button. I would really appreciate that. If you have any suggestions, comments, concerns, always put them in the comments. I read the comments every single day. I reply to the people who love the content. I reply to the haters too. Why not? And so put a comment down below, thumbs up, and if you haven't seen this video already, you definitely want to check it out. Click it and I'll see you there.